Hello and welcome back to Southbank Live, episode 38 of the show where we discuss the latest trends and news in markets and finance, while at the same time querying some of the themes that are going on underneath. My name is Boaz Shoshan, and I'm joined once again by John Butler. John, how are you getting on this evening?
Very well. It's the sun's back out following a bit of snow earlier on.
Quite a crazy mix of weather in London, and indeed quite a crazy mix of news that we've got this week. Markets all over the place, all manner of things that we could discuss, and it is hard to contain all of this in 1 hour. I thought we could start off the show today with our long short section, actually, just to change things up somewhat. So, for everybody listening who is new, good evening to everybody who is tuning in, or if you're watching a recording. In our long short segment, we take a look at markets or events over the past week, and we give a long, something that we're bullish on, and a short, something that we are bearish on. Doesn't need to be assets, and of course, it's not financial advice. This is simply for informational and entertainment purposes only. So, John, just to start us off, what would be your long this week?
Well, I would pick up where I kind of left off in our prior discussions, which was that the Ukraine war would actually eventually demonstrate that Russia's economic position was somewhat stronger than had been generally appreciated with respect to Russia's ability to export all manner of raw materials, and of course the need of the rest of the world to import those raw materials.
Yeah.
And now Russia's making an issue about use of the ruble as essential for continuing bilateral trade, which is their natural response, as it were, to the sanctions regime that various countries have put in place, but many countries have not. In any event, the ruble has responded very, very favorably to this, which does not surprise me at all. But what's interesting is that as of today, it seems the ruble, to the extent there's good price discovery in that market, I mean, it's arguably quite illiquid at the moment, but to the extent you're getting any transactions at all, we're back to where we started. Ruble's back to pre-war levels, and so I think from here the interesting thing to do is actually to stay long the ruble. I think the ruble strengthens when the smoke clears, and we are getting a de-escalation now. We are hopefully at the end of major military operations, thank God. I think the ruble is a net winner in foreign exchange terms, so I'd be long the ruble. Now that then begs the question: what do you pair it against? What's the short going to be? Look, I've mentioned this also before. I think the biggest loser is the world's predominant reserve currency. The whole concept of a reserve currency having been undermined by the way in which sanctions went after reserve currency balances through restrictions and arguably outright confiscation. And so I think the dollar is the big loser. So don't get me wrong, there are other currencies that are going to suffer, in my opinion, as a result of what's happened. But I think that a simple trade here is to stay long rubles, assuming that you've got some exposure, either directly through the exchange rate or through the stock market or whatever it is, and to be short dollars as that pair. I think that has a long way to go from here. We've simply come back to parity. We haven't yet seen the trade play out the way I would have thought.
Yes, it is quite remarkable to see the ruble recoup its losses, given the fact that the economic world has collectively thrown the sink at it when it comes to economic sanctions. Good evening to everybody in the chat. Leon, straight out of the gate, asked, can you discuss the financial implications of today's news regarding Putin's demand for payment in rubles? Thanks. Yeah, no worries, Leon. Don't worry. We will be discussing that in a lot of depth. Hello to Fee in the chat and Barry. And indeed to MW, who says ruble smooble. Well, we shall see, MW, we shall see. Hello to Andy as well over on Facebook. Now, if you do have an idea for a long and a short for this week, as I say, this isn't financial advice. This is just a general discussion and a bit of fun, ultimately, that we do in these shows. John, just to clarify, your long then is the ruble, and your short for this week is the dollar, correct?
Indeed, absolutely. And when I said we're back to parity, I just mean we're back to where we began when hostilities kicked off.
And despite the fact that all of these sanctions remain in place, and the world is still collectively looking for even more sanctions to place on Russia in one way or another.
Well, there's not. This is the thing, right? There's also market dynamics at play here. I mean, notwithstanding sanctions, you can't tell me that in a number of relatively neutral jurisdictions around the world, you don't have speculators, nevertheless, playing around, trying to get ahead of whatever they think is going to happen, and are allowed to play around without repercussions from their local governments. And clearly they think, or collectively, again, liquidity is not great at the moment, but collectively it appears they think that notwithstanding all the sanctions that have been placed on Russia, Russia is emerging from this in a relatively strong position. And in typical, trader buy the rumor, sell the fact mentality, they're acting before things are necessarily confirmed. It
Right.
makes you wonder what might still be in the pipeline. But and to some extent, clearly, this is people, this is the result of speculators trying to stay at least one step ahead of what we know.
Right. The market collectively trying to get ahead of whatever the latest news announcement is. I believe MW has submitted his long and short for the week, which is Bitcoin is the long and short the yen. And there's some very interesting things going on with the yen, which we shall return to later in the show. Lay asks, what are the implications for the price of gold, please? We shall come to that in a second. As I say, do feel free to leave your comments and any questions you'd like us to pose in the chat. It is great for you all to be joining us this evening. I thought I'd do my long short just at the beginning of this, slightly more lighthearted long and short, given the grim nature of so much of what is going on at the minute. My long for this week is trash, but not just any old trash. Trash that has been dredged from the ocean. So over the Christmas period, I gave my dad a watch as a Christmas present, which had a strap that was made of recycled ocean trash. And I thought it was a pretty cool idea. But ever since then, I've seen more and more designer brands that are taking ocean trash, specifically ocean trash, recycling it into wrist straps for watches, or even the dials for watches. I believe Oris, the Swiss brand, has a dial that's made from recycled trash, and each one's different because there's so much trash out there. And at the moment, it is Watches and Wonders over in Geneva in Switzerland, which is where all of the very fancy Swiss watchmakers get together and show off all of the new watches that they've made. And lo and behold, you're seeing more Swiss watchmakers with trash bracelets or trash straps. So at the minute, I think I'm very long trash, specifically ocean trash, because more and more people are going to enjoy wearing trash to signal to the rest of the world how ecologically aware they are and how much they want to help it out. I think it's probably a good example of supply side economics. That supply creates its own demand, John, where there's plenty of trash out there, and lo and behold, people are finding a way to make money out of it. Short for this week, we'll stay on the watches actually, just because it is Watches and Wonders at the minute. I'm short Blancpain, which is the world's oldest continuously running Swiss watchmaker. I believe they've been going since 1735, and I'm short Blancpain despite their great history and their beautiful watches, because Putin really likes Blancpains. He wears a lot of them, especially I think it's called the Aqualung, and as a result, given the amount of Russophobia out there, or Putin hatred, I think Blancpain's going to have a hard time of it. But now, getting back to slightly more market-focused events, getting into the ruble story, John, with Russia's demand that European companies, European nations ultimately must pay for the gas that they're sending over there through the pipelines with rubles. Open a bank account at a Russian bank and pay for this with the currency that we demand you pay. And a lot of people are saying, but all these contracts were written where they said we wouldn't have to pay in rubles. We'd be able to pay in euros, or we'd be able to pay in dollars. To which the Russians say, well, you guys changed the laws to put sanctions on us. We're just going to change the laws to demand that you prop up our currency. Very interesting dynamic going on here. Could you dive into it a little deeper and tell us what's really going on?
Well, this isn't just the story of the week. I mean, this is the story of the decade, or indeed the half century, because this is the first time that a major country, one that is in a position militarily to defend itself against the United States, has decided to take an action which basically requires gold payment in exchange for its exports. Now, de Gaulle of France came close to doing this in the 1960s, but in a way, a deal was kind of worked out there, and it never resulted in any sort of armed confrontation. And thank God, because of course by that time France had become a nuclear power. But they did have a similar spat, which arguably was one of the major contributors to catalyzing the end of the formal gold backing of the dollar under the Bretton Woods arrangements. But here we have a big spat, obviously over developments in Ukraine, where Russia has had its foreign exchange reserves confiscated. Russia claims that's illegal under international law. It is. That said, invading another country is also illegal. So, plenty of laws are being broken here on all sides. And so for Russia now to say, oh, we're going to abrogate all of these contracts and simply replace them and make them ruble-based contracts is just breaking yet another precedent, and yet a historically potentially very significant one. Keep in mind also that when Franklin Delano Roosevelt confiscated private gold holdings in the United States in the 1930s, he also abrogated all the contracts that had gold references under U.S. law just by executive order. And I think eventually that did go to the Supreme Court, and the Supreme Court did rule that that was somehow still constitutional, notwithstanding the very obvious clauses in the U.S. Constitution that only gold and silver can be used as money.
When the president does it, it's not illegal.
I guess. Look, it's one of those things. Look, the fact is that notwithstanding the very, very strong tradition, for the most part, in the Western tradition of the rule of law, every once in a while something like that happens, and it doesn't make it right. But yeah, this is reality. This is the way the world works. And this is an example of Russia doing the same thing. So if anyone really tries to have a go at Putin saying, oh my God, you can't do that, it's illegal, I mean, he can point the finger to, among others, the United States and Great Britain, which also suspended gold convertibility when World War I broke out. And so, look, whatever, all's fair in love and war is what it comes down to. And this was a card that Putin naturally was going to play, in my opinion, given Russia's strength as an essential net exporter of raw materials to the rest of the world, as well as its substantial gold reserves. I mean, who didn't see this coming? Well, who knows?
Yeah, I'm surprised at the amount of surprise that people are expressing over this event. It seems strange that people would think that they wouldn't void these contracts. Like that's a bridge too far, given the current scenario.
Well, look, again, this is the thing, right? I mean, sanctions, there's a lot of literature on this now because economic sanctions have been used in various forms as instruments of policy for a long time. And economists to this day can't disagree whether they really work or don't work. I think there are cases where they do work. In my opinion, for example, the sanctions on South Africa when it was still under apartheid, I think those really did squeeze the country. And I think they really did help to drive the ANC and the government to the negotiating table in a way that ultimately resulted in a peaceful transition from the apartheid regime to the regime we have today. And, it's no surprise in my mind that de Klerk shares the Nobel Prize with Mandela. He might not get as much credit for it. But the fact is that, both sides had to move on that one. They had to work together. And the result was very positive. And so I do think the international community really succeeded with sanctions in that case. But it's kind of the exception that proves the rule. There are also plenty of cases where sanctions clearly haven't worked. And in some cases, they've only exacerbated what was already a bad situation. And so yes, the idea that there wasn't going to be a counterproductive, unexpected consequences to this is just ridiculous. I mean, clearly that was going to be the case.
Those lessons learned from South Africa, could you go even further back and say those were lessons that, if sanctions are effective, that were learned from Rhodesia?
Well, again, I mean, this is the thing, right? If the great powers of the world can more or less line up behind sanctions, then yes, I think you can get a lot to happen there. And of course, back in Rhodesian days, you had obviously a very different situation with respect to the position of the British vis-a-vis their the Commonwealth in Africa and whatnot. But the fact is that In reality, if you have a major great power or one or more major great powers, in this case, Russia, China, and India, and arguably even Brazil, who aren't on board, then it's going to be very difficult to get sanctions to work. There are just too many
Certainly.
defectors, right? Too many unwilling to cooperate. And one of the most stunning maps that I looked at recently was one that simply colored in the countries that are the ones that have gone along with the US and NATO in imposing sanctions on Russia here, and those that haven't. And it's only about 1/6 of the entire landmass of the world, which basically is mostly North America
Right.
and Western Europe, and that's it. So yeah, it makes you wonder what's going on here. It's not truly a global policy, the way it kind of had become with South Africa at one point.
Right. Yeah, and indeed, I guess I'm kind of going off slightly on a tangent, but with the Rhodesian story, I mean, Rhodesia didn't really have any allies apart from South Africa for a little while as well, and even then, it wasn't very strong. Very interesting, the entire scenario we have where there's so many people who are on side of the sanctions. Well, relative to the world's landmass, as you describe, uh, some of the loudest voices, I suppose, are pro sanctions, while there is a very large silent majority there which are not joining in on it. John, where do you think it's going? So, what do you think is going to happen as a result of this? Do the European countries actually have a choice here?
Look, in my opinion, and I know this is controversial. It's been controversial ever since I started writing about it over 10 years ago now. The cat's really out of the bag, or you've opened Pandora's box. Choose your metaphor. The thing is this: by the US demonstrating, and not just the US, other countries, of course, are taking part in this, by demonstrating that foreign exchange reserves can be frozen for whatever reason, and that the foreign exchange reserves of a major great power, a nuclear power, can be frozen for whatever reason. That's a big deal. That hasn't really happened before. And it sends a message around the world. And again, I mix metaphors here to make the point. It's both a shot across the bow of China, India, and the other great powers, but also the US arguably shooting itself in its own foot, because you're telling the world that the dollar can be weaponized at will by the United States if and when it believes you're acting in a way sufficiently unacceptable to merit such action. And that is not a recipe for the issuer of a reserve currency to maximize its acceptance and use for international trade and as reserves. And I think that this is going to be seen in retrospect as a properly historic moment. The US has inadvertently told the world that it is not only multipolar now in terms of general economic power, that is GDP, call it what you want, national income, export prowess, but specifically with respect to choice regarding what you hold as reserves. You better be diversified now. If you only hold dollars, you're in real trouble, because you'll be completely beholden to the United States. And I'm not sure any major power would want that lack of flexibility going forward. So this is going to dramatically reduce, not overnight, but it won't take too long, in my opinion. It's going to dramatically reduce the overall dollar composition of reserve balances, the overall dollar composition of denomination of world trade invoicing, etc., etc. And that's historic.
Certainly. I guess the counter argument to this, that American exceptionalists, or we could call them dollar maximalists, would say, well, just don't invade anybody and nothing bad will happen to you. But ultimately, if you just go over the past 50 years, it's pretty hard to find a developed country that has fallen afoul of the US at some point without actually invading somebody, right? I mean, you can find, the UK has fallen afoul of America, France has, without actually invading anybody.
Yeah, again, I think the French example is an interesting one, because here you had a country which was a US ally merely 20 years before their actions to begin to remove themselves from NATO and to consider adopting an independent policy in all aspects, military, economic, you name it. And so what France did was interesting in that regard because they were nominally an ally, but they chose to begin behaving like a neutral power. I don't think anyone would ever, no historian is going to look at France and say, oh my God, they were an outright enemy of the United States starting in 1965. But certainly France was behaving in a neutral way. And I think there's a lot of evidence today that countries like Turkey, Germany, and a few others, arguably Brazil, and certainly India has always been this way, are behaving now in a very neutral way vis-a-vis the US. And the idea that they want to be constrained in their actions, be they political, military, economic, or anything else, because they're beholden to the US financial system, SWIFT, the dollar. No way. And now they're receiving the clearest lesson yet that they're going to have to diversify, they're going to have to be more flexible, and that they cannot depend on the United States to honor their obligations if push comes to shove over who knows what issue it might be.
Got a question here from Lay, who asks, what are the implications for the price of gold, please? Well, Lay, I guess the argument here, John, is that as you can't trust on the dollar nearly so much as a reliable store of value and means of exchange, if you are a foreign country who is acquiring foreign exchange reserve, which is acquiring savings as a nation, well, that creates a much bigger argument for gold to be a part of your balance sheet, right?
Oh, absolutely. See, this is the thing. And if you are going to engage in international trade that is not simply using the dollar as the dominant reserve, trust and faith in the US government to honor that obligation, not to devalue it too severely, although clearly with inflation where it is currently, the US is doing precisely that. If you're going to be able to operate in that way, if you're going to get your other trading partners to trust you, you're going to have to demonstrate that your own currency is solid, right? That you're not going to devalue your currency disproportionately vis-a-vis others, because if you're a net exporter, they're going to have to hold they're going to have to hold your currency in
Yeah.
exchange, perhaps indefinitely. Who knows how long that goes on? And so your net exporting nations, and again, the big ones are China, Brazil, Germany. I mean, Japan used to be, less so anymore, but you've got some big ones out there. They are really not going to want to rely on the dollar now. It's increasingly dangerous to do so. And if you're a net importer, it's different, right? If you're a net importer, you're not as bothered because you have less to lose. But the game theory dynamic amongst the exporters, the game is afoot. And they now are going to race, in my opinion, to outrace each other in their dollar divestment and diversification and accumulation of alternative reserves, the king of which, of course, is gold, because no country can manipulate that to their benefit. And if you own gold, of course, you hold the ultimate trump card in the event you get into a sanctions war. So I think this has really been set off now. And for every country that doesn't divest of dollars, another country has to accumulate more. Who wants to accumulate more right now? And if no one's willing to accumulate more, then by definition, the dollar is going to decline in value, or the US has to raise interest rates and make it much more attractive to hold dollars. Well, good luck with that, in my opinion, given the financial constraints of the United States nowadays.
Yeah, this raises the issue of currency wars, or raises or intensifies an existing currency war as it stands. So this multipolar world where each nation needs to be really needs to prove itself as to the value of its own currency vis-a-vis other ones, leads to lots of manipulation in trade, lots of manipulation in currency, in interest rates, in order to maintain the value or to decrease the value of their own currency here. We do get a question from Scarlett, who asks, will the Fed, Bank of England, or the ECB raise rates with any gusto? And if so, does yield curve control kick in? Very good question, Scarlett. I would have said no. They'll only raise rates a little bit because they like the fact that inflation's destroying all of the debt that everybody was worried about. But John, what do you make of that?
Look, this is all part of what I call the great rebalancing, and the partial, if not complete, remonetization of gold is part of it. The fact is, there are some countries in the world, the UK, the US, most of Western Europe, that are not only over indebted, but they are over indebted alongside large trade deficits. That is, they've been chronically importing more than they export. Any economist will tell you that that's unsustainable in the long run, but economists don't like talking about the long run because it tends to make them uncomfortable, because the long run tends to be at odds with what many economists suggest, such as, oh, gee, we're going through a soft patch, spend more money, we'll come out of it. But they like to ignore the long run. And of course, the Keynesian world that we live in, or neo-Keynesian or new Keynesian, whatever, frequently quotes Keynes when they get criticized. Keynes famously said, well, in the long run, we're all dead, whatever. But that sort of dismissal of what is a sound economic argument, that you simply cannot spend and import more than you save and export long term. I mean, that's basic logic, right? I mean, you can't disagree with that. So in any event, there are some countries that are simply not in a position to raise interest rates because they've run up these colossal debts and they're uncompetitive in global export markets. Whereas there are some countries that have not run up colossal debts and are competitive in international export markets. They don't necessarily need to raise interest rates. They might be able to keep rates where they are and nevertheless keep their currencies and their price levels stable. But you are going to see a general inflation roll through the more overly indebted parts of the world, including the United Kingdom and North America. And that is going to result in some increase in interest rates in response, but not enough to compensate, because that's part of the great rebalancing. You simply have to devalue those debts. And you either do that through outright default, which I don't think is going to happen, or you allow those currencies to depreciate through disproportionately high inflation over the coming years.
Not a great outlook if you own any of those bonds, which everyone is trying to devalue and destroy over time. Though a huge number of investors do own them just without them even really knowing about it, through pension funds that have auto rebalancing and things like that. Very interesting. It'll be very interesting what happens there. And
well, that goes back to Keynes. That goes back to Keynes again. I mean, Keynes also openly advocated devaluation and inflation as tools to smooth out the business cycle and deal with financial crises when they might arise, such as the Great Depression, of course, that he wrote extensively about. He called that form of financial repression, that is, forcing pension funds, insurance companies, whoever it is, forcing them to buy government debt. He called that the euthanasia of the rentier, that is, those dependent on fixed incomes in retirement. And he said that thinking it was a good thing, a necessary thing, I should say.
Well, yeah, he's certainly a very politically motivated guy, even though everyone here reveres him as a grandmaster economist without actually thinking so much on his own political thoughts. Some very interesting comments here in the chat. Some good questions here too. This one from Sandeep, who says, hi, John. Considering that we are going to a stagflationary situation, a high probability, won't this lead to demand destruction? How would it impact commodity prices and currencies like the ruble? Very good question, Sandeep. What do you make of that, John?
It's a second-order effect. I mean, Sandeep is right that stagflation results in destruction of real demand, but it doesn't necessarily result in destruction of nominal demand. And what I mean by that is that you still have more money chasing fewer goods. So the price level can rise and demand can rise in nominal terms. But the actual number of eggs or ounces of meat or widgets you're able to buy at the market per unit of currency will be declining. And so nominal demand destruction may not happen, but real demand destruction, that is the kind that ultimately matters, absolutely. We are all going to feel poorer a year from now unless we win the lottery.
Yeah, stagflationary environment is not a happy situation at all. Though it does feel like that is where we're going. I knew it was only a matter of time before somebody started commenting on John's scarf. MW, nice scarf, John. I assume your heating is off. Can we confirm that, John?
My heating is off, and as you know, Boaz, because you're in the London area, I understand, there was a real plunge in the mercury today, and it feels properly winter-like again all of a sudden. So yes, scarf is definitely warranted.
Yeah, certainly. Certainly a very strange day in London with sun and snow at the same time. Robin and Paul are both very upset of my use of the word trash instead of rubbish. Rubbish, not trash, Boaz. We are British. Yeah, I guess. Sorry, guys, but trash just sounds better. MW, too long in the pub, Boaz. I'm afraid not. MW. It's a month into Lent now. We still have 2 weeks to go before I can drink again. I wish I was too long in the pub, but alas, I've a fair bit to wait. Sandeep asking, do you get carbon credits when wearing trash? I'm sure some venture capitalists out there can figure this out for some of these fashion brands. I wouldn't be surprised if that happens. A good question here regarding Russia's lack of debt and their ability to withstand sanctions. So we do get a comment here that, let's see if I just find it. This is from Liam. Hello, John and Boaz. Russia has virtually no national debt. Will this allow them to tough out any sanctions? I think this goes hand in hand with the ruble situation. Would you say, John?
Oh yeah, look, I mean, if you were a Martian coming down to Earth and you simply looked at every country's financial statements to try to get a sense of, who's doing okay and who's not doing okay, when you looked at Russia's balance sheet, what you would see was that it's like, oh, we've got very little debt and leverage here. We have a money supply which is well backed by gold, and it doesn't appear to be much leverage in the private sector either. And so the conclusion you'd reach is that this economy looks basically okay. It's a good credit risk. So if I, as a Martian, am going to lend to a terrestrial entity here on Earth, Russia would be on my short list of a good credit. And then you take a look at the same metrics for the UK or the US, for example, and you look at debt to GDP of well over 100% now. You look at the amount of leverage in the system. You look at the extremely low lack of gold backing in the US. It's only about 2.5%. In the UK, it's not even 1%. And you would conclude that they were really bad credits. There's no reason to lend to these guys. Now, of course, because they're not on Earth, the Martians wouldn't be concerned that there might be a military issue regarding whether they ever got repaid or not. So any sort of assessment of military power wouldn't enter into the equation the way it might on Earth. But that's the way the numbers work. I mean, Russia's balance sheet, it looks good. That's just the way it is.
Yeah. We get a comment here from Stephen saying the dollar cannot be a global reserve currency when America denies parts of the globe access, which is an interesting comment. It certainly makes sense in theory, though when you look at how long America has denied countries like Iran and Venezuela access to the global financial system, it feels like they can get away with it for a while at least. But is this the straw that broke the camel's back? I mean, it's not much of a straw. I mean, this is an enormous log, effectively, these Russia sanctions, John. Do you think this is the tipping point that brings it around?
Look, it could be. I mean, you can't see tipping points in advance. You can only see them in retrospect. But certainly, I would argue that this is of historic significance. And if it is not the tipping point, then it will be seen in the rearview mirror by historians as something definitely notable and worth referencing in terms of the evolution of the international monetary system, as well as all kinds of other things. Because the fact is that, right, this influences everything, right? It influences regional balances of power. It influences economic power. It influences monetary power. It really influences everything. And I'm not surprised that it's become the focus point it has in the financial markets, which, in my opinion, actually ignored it for much too long as a possibility. I mean, you had people like Jim Rickards bringing this up ages ago. I wrote about it ages ago. There are a handful of others. Lee Quaintance and Paul Brodsky brought this up ages ago. I mean, there are lots of prominent names, but none of them are mainstream, as it were, right?
Right.
But now we're seeing it.
There are a lot of different angles to this, I say. We could speak about this for a very long period of time. There is a related topic I think ties into this, which I'm still thinking through it myself. So today, the US announced that it was drawing on its strategic petroleum reserve. and it will be draining that by at a rate of 1 million barrels per day for the next 6 months. So this should be looking like 180 million barrels over the course of this drain. And that equates to about a third of the entire strategic petroleum reserve that is owned by the United States, that has been accumulated by the United States. Now, correct me if I'm wrong, John, I was under the impression that the strategic petroleum reserve was a strategic resource that was only to be drawn on in times of vital, critical need for the United States, rather than an enormous pool of oil that should be drawn upon whenever the consumer is getting rather irritated at oil prices and it might affect your re-election chances in the midterms. Am I seeing this the wrong way?
Look, this is not the first time, in my opinion, that the strategic oil reserve has been used for arguably domestic political, as opposed to genuine crisis reasons. I believe George W. Bush also tapped the reserve during a spike in oil prices during his presidency. And certainly there has been pressure multiple times to release some oil from the reserve during previous price spikes under other presidencies, although they haven't necessarily resulted in a decision. The pressure's been there. So the strategic oil reserve, while in principle, as you say, should be a strategic oil reserve to serve the national interest, and yet it seems more commonly to be used to serve the political cycle in the U.S., depending on how it's going and who's in power. This does look like one of those. The timing, obviously, don't get me wrong. I mean, oil prices are high, and there are midterm elections later this year. You could say it's coincidental, and yet, the timing does sort of confirm what we have seen before. So the cynical part of me wants to say you're absolutely right. When in doubt, politicians want to be seen to be doing something, whether it actually affects the price or not. Maybe it does, maybe it doesn't, but to be able to campaign claiming you've done something is generally seen as a positive, whereas coming under criticism that you did nothing is generally seen as a negative. And so this probably does fall into that category of action.
Yeah. Martin comments, selling oil when the price is high. Why is that a good thing for the public? Well, the point, Martin, is not that it's what's good for the public. It's what's in the strategic interest of the survival of the United States. So the Strategic Petroleum Reserve, as far as I'm aware, though I could well be wrong, was created much more as a last worst case scenario. This is our emergency oil reserve that we're going to use in order to ultimately survive as a nation, probably in a military sense, rather than as something. Oh well, let's help the public and burn a third of our strategic petroleum reserve. However, I'd like to posit an alternative take on this, John. And if we disregard the cynical political possibility of what has driven this, and we look instead to what's going on in Europe, could it be that the US, in dumping 180 million barrels of oil on the market over the course of the next 6 months, is actually trying to depress energy prices more globally and, in a way, help out a bit more of the European nations when it comes to meeting obviously they're after gas rather than oil quite so much. But could this be an attempt to help the Europeans by depressing oil prices?
It could be. You could argue that anyone who's an oil importer benefits from this at the margin. I stress at the margin because you could say that the amount of oil involved here is a drop in the barrel in this case. So one wonders what sort of impact it really will have on the global oil price. But again, as I said earlier, at least Biden can claim to be doing something, and he might claim to the Europeans anyway that, oh yes, this will definitely help as a way to buy time. But I doubt that if you wait a month or 2 months or whatever, I doubt that this alone will have a material impact to bring the global oil price down. It's just not enough volume. Now, if Biden also gets the Saudis to pump more, other OPEC countries to pump more, then okay, then it starts to look more meaningful. But this on its own it's just not enough. If you look at the demand function for oil, the supply function for oil, it's just not enough to be that meaningful. The swings we're seeing in the oil price, which have been huge in recent days, to the upside, to the downside, I doubt are swings due to speculation about precisely what Biden will do regarding the reserve. It's other factors, in my opinion, that are really driving that price.
Alexander in the chat says George Bush's decision was different. The big difference is that Bush used it after Hurricane Katrina. So it was in the national interest, but Biden and the Democrats are doing it for their re-election gains. Well, we won't get into the political Bushes, but it is very interesting to see this decision. I think this is the largest drain on the Strategic Petroleum Reserve since the 80s, or indeed maybe even ever, I think. The biggest ever release from the SPR. So it is a very notable event. I mean, if none of the other stuff was going on in the rest of the world, this would be front page for an awful lot of different newspapers. But in this scenario, this is almost like a sideshow as to what's going on. On this note, I think it is quite interesting when we're looking at petroleum. You mentioned Saudi Arabia and the US, wanting the Saudis to pump more oil. This is something that we've seen occur already, and MBS, Mohammed bin Salman, at least as far as the newspapers reported, were not even returning the calls, which is quite a statement. Do you think in the current situation, John, that the Middle Eastern oil producers are taking quite a different line than they normally would with America vis-a-vis Russia?
Look at the history of it. And there have been times in history before the Second World War and after the Second World War when the Middle East has tried to also behave as neutral powers, respectively, the various countries involved. And I mentioned that earlier about the big countries, Germany, Turkey, and a few others. But the Middle East also, from time to time, has tried to play the great powers off against one another. And I think there was a period, a multi-decade period, when they didn't play much of that game. The Arab-Israeli wars were over. The U.S. was the dominant power. The Soviet Union was going from weakness to weakness. And they pretty much went along with the continuity of policy vis-a-vis international monetary relations, economic relations, how they sided with things politically, so on and so forth. That may not be true anymore. It may well be the case that not just Saudi Arabia, but a handful of the other big Middle East oil producers, and Iran is an interesting one in its own right, but it may well be that they are now inclined to behave more as proper neutral powers, playing China, Russia, the US, India, and whoever else off each other to get the best deal they can. The brief answer is, I do not think the US has the same influence over Saudi Arabia and a handful of the other Gulf states today that it did 20 or 30 years ago. I think it's dramatically less. Whether it is now properly a neutral region geopolitically, maybe a big call, but it's certainly not clearly in the U.S. camp the way it was for a long time.
It certainly doesn't appear that the Saudis and the Americans are getting on quite so well as they were during Trump's reign, at least, given I think one of Biden's very early announcements when he was made president was pretty negative regarding the oil producers like Saudi Arabia, and it doesn't seem to be looking very good in retrospect. Stephen asks, why not import oil from Venezuela? Well, Stephen, I believe the US does import a fair bit of oil still from Venezuela, and I believe this more recently with the Maduro-US accords, well, not really accords, but the Maduro-US correspondence, they have managed to secure more favorable arrangements. But even during the really harsh restrictions that were on Venezuela, there was still Venezuelan oil flowing to America. Problem is, Venezuela doesn't produce that much oil anymore. It is for a number of reasons, one of them being that the economic system in Venezuela is very, very poor. The whole communism thing didn't really work out so much in the end. And Venezuela's oil production is a fraction of what it used to be. So even if they were going to just say, you guys just pump as much as you can, we'll take all of it, Venezuela can't produce that much anymore. Going to, well, actually, another question from Robin here. How can the US ship gas to Europe when they are no longer self sufficient under Biden? How are the Americans going to heat their homes? Interesting question here. John, have you any comment on that?
Well, the US is promising to try and facilitate the shipment of LNG to Europe because the US has huge natural gas production capacity now as a result of widespread fracking, as well as just being, very, very fortunate to have natural reserves that are quite easily accessed. But what the US is not in a position to do straight off the bat here is to take a lot of that natural gas and package it up as LNG, which is a difficult process, right? It's not easy to get gas that cold, and then to load up the ships and send it across the Atlantic to Rotterdam, which I believe has Europe's big LNG terminal, and then distribute it from there. So it's a bit of a stopgap. It's a bit of a band-aid. It buys a little time, perhaps. Obviously, if Qatar is going to play ball with this, which they probably will because there's a lot of money in it for them, they'll also try to ramp up LNG capacity because they're a huge LNG player. But the idea that even that combination is going to fully offset Europe's huge reliance on Russian gas, it's almost laughable. It really is almost laughable. The idea that it will work even long term, I think, is pretty laughable. And so the real question here is, what will it take for Germany in particular, maybe a handful of others in Europe, to come to the realization that they just cannot depend on external LNG forever, that they're going to have to bury the hatchet with Russia somehow in order to get access to that gas. Now, in my own opinion, and I've said this before on this show, in my own opinion, there probably already are back channel discussions between Germany and Russia regarding how to get through this crisis and eventually how to switch on Nord Stream 2.
Right.
I don't think that discussion ever stopped. I mean, maybe briefly when things kicked off in Ukraine. But the fact is, Germany and Russia want to trade. They really want to trade, right? Germany needs the gas, Russia needs the money. Nord Stream 2 is ready to go. The only problem is this sticky politics we have to get through. And in my opinion, we will get through. But in the meantime, yes, the US and Qatar and others perhaps will make every effort to try and supply LNG, but it's not a viable long-term solution.
You'd be accused of being incredibly incredibly cynical. You'd probably be accused of being a Russian supporter. You're a Putin apologist, John.
Wait. Now, I get this all the time. Okay, I get this all the time. It's a basic logical fallacy. If you believe that Y follows X and you don't like Y, then don't do X. That's just common sense realism. Okay, and the fact is that Germany did not want its gas supplies cut off. And here we are. Okay. They nevertheless went along with this canceling of Nord Stream 2. And then Ukraine kicks off, and now their gas supplies are cut off. Well, if you didn't want that to happen, maybe you should have done things slightly differently. Does that mean that Germany's the bad guy in this? No. But maybe they misunderstood what was going on. And now they're going to have to learn. So this is not, you have to try to get above the good guys versus bad guys narrative here, not only because there's so much propaganda out there, but also because it's actually not helpful as an investor. Now, again, I don't want to make some moral point here. In fact, in a way, I'm making an amoral point. If you're an investor and you want to invest for impact and morality and ESG and whatever, that's absolutely fine. But if your primary goal is to protect your wealth, then you cannot think that way. And that's what I try to help people to do.
Certainly, John. I was that was a provocative question. I apologize for yanking your chain.
Sorry,
that. But it is good to sort of temper it, because the prevailing narrative at the minute is all very emotional. It's all very knee jerk, and it doesn't take into account a lot of the realities when it comes to energy ultimately in Europe. Looking this entire past 20 years in Germany, it is interesting to imagine how that's going to be recorded in the history books. I mean, you see Germany kick out their coal stations and then kick out the nuclear power and then sign on for all the Nord Stream 2 stuff and go real hard on gas and then turn around and say, actually, no gas. It's hard to, looking back on it, it's easy to say, oh, well, this is ridiculous. Though at the time, there weren't that I can recall, there weren't that many voices saying, this is really stupid. You are making yourself very, very dependent on a country that at the same time you are very willing to go against in a lot of ways. I
Look,
feel
Germany has made this mistake before. Okay, to be fair, to be fair to Germany, they do occupy a challenging geopolitical position because they are a land power primarily. I mean, they do have some access to the sea, but they are a land power primarily, and they are surrounded by countries roughly as large or even larger than they are. And so this means that Germany is naturally prone to being encircled by enemies, and that has happened multiple times in Germany's history. And indeed, if you read the history of Germany and the history of the Holy Roman Empire, bizarrely, the whole growth of the German Empire can be explained as defensive growth. That is, they were always attacked first. If you go back far enough in history, they only became the aggressor in the 20th century. That was kind of a bit of a change, a sea change for Germany's historical geopolitical experience. But I would have to argue, and I'm not going to make any friends here, that Germany has really played a bad hand this time around. They're still as surrounded as they ever were, but they somehow thought they could favor the US and NATO disproportionately in security terms, whereas they could favor Russia disproportionately in energy security terms. And they did not see that the two would eventually come into conflict. I'm surprised that Germany didn't see this coming a bit sooner and didn't plan for it accordingly. But again, I'm not saying it would have been an easy hand to play, but it seems they didn't even try. And that surprises me a lot.
it's almost like they kind of offshored their strategic thinking to America in a lot of ways, perhaps similar
Look,
to.
as I mentioned, also controversially on this call, our show. Gosh, this is probably a couple months ago now. I actually predicted that someday Germany will realize the only solution to providing both military security and energy security is to develop an independent nuclear capability, because then they can keep Russia at bay in the event that Russia gets too aggressive in Eastern Europe, and they won't have to rely on the US for security, and they can take Russian gas when and where they please. Um, and who knows? Maybe these developments will catalyze that sort of decision. Maybe Germany is going to demonstrate a nuclear capability next year. They could do it in probably weeks if they absolutely wanted to. I might be exaggerating, but probably no more than months. We'll see.
We shall indeed. Some very, very lively chat this episode. Thanks again to all folks tuning in. MW says Biden would make a good Thunderbird character. Funnily enough, the Kim Jong Un video that was released, the montage with the missile, was very very perfectly dubbed over with the Thunderbird soundtrack last week, which I thought was a very good match. We do get a lot of comments here on the gold side, which I think we should come back to as we are reaching the end of today's call. But before we get there, John, what's going on with the yen, and why is it so interesting? Why is it so important to all investors? Because this is a very interesting phenomenon that's been going on in Japan for a very long time. And interestingly, we're seeing a lot of weakness in the yen when the yen is normally a safe haven currency. And there's a war on. So you would have thought yen would be bid. But that's not happening this time. What's going on? And what do you think is happening behind the scenes?
Japan is in a very difficult position. I mean, I spoke a moment ago about the difficult position that Germany is in, and I don't want to belittle that at all. But arguably Japan is in an even more challenging position. And the reason why is because not only is Japan essentially 100% dependent on imports for its energy, but those imports have to come by sea. At least Germany has some flexibility. They can take it by land and sea. Japan can only take it by sea. And the sea currently is controlled by the United States. And so unlike Germany, which I believe has a little room for maneuver, in being a neutral power. Japan has far less room for maneuver in being a neutral power. They really need the protection of the US Navy. And that becomes all the more concerning if you think that at some point China is going to have a go at taking over Taiwan. Because if you look at a map, you realize that the sea lanes that are used by Japan to supply it with oil, or anything else for that matter, tend to pass by Taiwan. And if China controls Taiwan, they're in a position, not today, not tomorrow, but someday, they're in a position to effectively impose a partial blockade on Japan in the event they ever have a big bust up. And of course, Japan does not want to allow that to happen. So why is the yen so weak? Well, oil prices are super high, and Japan is completely dependent on these oil imports. They have a huge fossil dependency still because, of course, they scaled back their nuclear ambitions somewhat post Fukushima. So they're very directly exposed to those high oil prices. Okay. And yet there's also this looming risk that they're going to be held hostage at some point because they just don't have the flexibility to respond to a rising China the way Germany might have or other big exporters might have. So Japan's kind of stuck between a rock and a hard place. And the fact that the fact that they still have their demographic issues, the fact that they still have other issues, you add it all up, and it's kind of a perfect storm for the yen. Now, I think it's limited in scope. I think Japan is still simply too competitive an exporter for the yen just to get hammered forever. But I do think that this episode of yen weakness demonstrates just how exposed Japan is to natural energy insecurity and the fact that there is no obvious solution to that problem. Whereas Germany has a solution, in my opinion. It's about becoming a nuclear power and playing the US and Russia and China off one another more effectively. I'm not sure Japan has quite the same options at its disposal.
A lot of investors have seen the Japanese stock market, the Nikkei, as a great value play over the years. And we have seen some interesting reactions in the Nikkei over the past 2 years during the lockdown period. Do you think then that the Nikkei maybe isn't quite such a safe haven as a lot of people think? Because a strong value play, well, these are really cheap, valuable companies, and while they're as they're such a low price, they can't fall that much further. With that in mind, if the energy security is, as you describe, in such a state of peril ultimately over the long term, is the Nikkei maybe, and the yen for that matter, not such a safe haven as everyone has become used to?
Well, the yen has taken a big hit here, as I mentioned. That said, don't write Japan off. I mean, look, again, they have a very difficult hand to play here, a very difficult geopolitical position. But their ability to innovate, their ability to export, their ability to get on with it. There's this unbelievable get on with it sort of cultural attitude that the Japanese have. I have deep respect for that, a tremendously deep respect. And when it comes to your big manufacturing houses, I think Japan will continue to do well. And again, think about it. Your energy input costs might be going up, but if the yen is weakening, then the margin, the effective margin to an exporter arguably remains more or less unchanged. You pay a bit more for your inputs, but you're getting a higher profit margin on the world
Right.
stage for your outputs when you export them. I think your big Japanese manufacturers will be able to weather this storm. That said, will Japanese property values rise in the same degree? No, you can't export property. Will Japanese services or financial services benefit in the same degree? Absolutely not. You can't export that either. But when it comes to raw manufacturing, I think Japan will find a way through this, notwithstanding the challenges.
Right. Now we are drawing to the close of this episode. We do still have some great questions here. Where Sandeep asking, Sandeep believes that the post-USD system will probably take a few decades to realize. How do you see this developing alternative systems, etc.? And Apple, who asks a great question, do you think the pound will ever go up? Which is very, very appropriate. But I think both of these will need to wait until our next episode of Southbank Live. As with all our episodes, this shall be uploaded as a recording for some folks who have only just tuned in. John, just on a closing note, any comments on where we are at the minute, as this has been yet another action-packed week for everything from markets to geopolitics to credit? What do you think our viewers should be paying attention to at the minute?
Well, look, Boaz, ever since we started the show, I mean, I've generally been defensive. I've become more defensive even before hostilities kicked off in Ukraine. And even if hostilities are coming to an end soon, and indeed it looks like major military operations have, we finally have people at the negotiating table, thank God. Hopefully the worst is over for the Ukrainian people, who are the big losers in this. I mean, notwithstanding everything else going on in the world. There's potentially some good news on the horizon. Is it good news for investors? I think there's been so much damage done. I think the stagflationary negative supply shock aspect to what's happened and the impact on corporate profitability, in particular intangible profitability, such as big tech, I don't think it's priced in yet. So even if we get a relief rally, when there's finally clearly a deal being done to end major hostilities here, I would sell that relief rally. I would sell the relief rally, especially in big tech. And I would do what I've already suggested, which is rotate into the ruble and Russian stocks, which I think are going to absolutely scream higher going forward. Again, it's difficult to get access to that. But there are some associated economies where Western investors might be able to get access. Okay, so have a look at that. And I also still believe that the place to hide throughout is basic industrials, places where pricing power is strong and stable, margins may be low, and profits may not grow very much in real terms over the coming year, but at least nominal profits will keep up with inflation. And so, unlike bonds that lose value in inflation, these basic industrial shares should retain their value. It's almost as if they've acquired bond-like characteristics for the defensive investor. And then, of course, remain overweight precious metals. I think that's a no-brainer, especially if the world's going to start relying more on gold or gold-linked trade in some way going forward.
That's certainly a topic we can explore in a future episode regarding alternative systems with gold as a key player inside of that. But I think we shall end it there. Again, this was a great episode. Thanks to everybody who did tune in live. Very good questions from the viewers. Very good indeed, and a lot of interesting comments as well. Some folks are commenting on the lack of light in your current room. John, we'll let you turn that on.
My apologies for that, everyone. But I didn't realize the timing here being as it was. It was super, super bright when we started. And I was relying on that outside light. Now it's simply the screen of my computer, but it does make for a bit of a horror show, I guess. But given what we're talking about,
I was going to say
it's appropriate.
Very good. Thanks again to everybody who has tuned in this evening. Great episode as ever. And of course, if you're watching a recording, do give us a like and subscribe if you're enjoying the show. We shall be back again next week. I hope you can tune in there. But for now, that is all. I hope you enjoyed the show, and we'll see you in the next one. Bye-bye.